Hello and welcome to IBA's Market Update. Thanks for joining us today. My name is Melissa Wybrow and I'm joined by Stuart Hatcher, IBO's Chief Operating Officer, and Mike Yeomans, Head of Valuations. So with strong headwinds expected for aviation in 2020, this session will be looking at airline failures and the impact on the ABS market, OEM performance and the max effect, expectations around retirements, forecast lease ends, trading activity, and long-term lease rate performance with a closer look at the A330. So as you can see, we've got quite a lot to cover in the next hour, but we do hope to have some time at the end for questions. So feel free to drop us a line using the question pane on your screens. Okay, so let's get started. Stu, I believe you're going to kick off by setting the scene with a look at market dynamics.
That's right, thanks Mel. So making the initial start on slide 2, looking at the macro outlook and the GDP and interest, and I'll only briefly touch on some of these points. I think that many people are aware of the situation. GDP growth down around 3% in 2019, which is a considerable drop from where predictions were earlier in 2019, although the expectation is a little bit of a rise up in 2020. Generally looking at the splits between the sort of advanced economies and the emerging market, most of the slowdown is expected for the advanced economies. So looking at the US, 2.3 down to 1.8, although I have seen some investment bank predictions at around 2.3. So there are some variables out there that are still making shape, and some of those are driven a little bit by the build up towards the US election towards the end of the year. Within the euro area specifically, around 1.2 down to about 1%. And with, as we've seen for 2019, a lot of German impact in that area. Japanese market 0.9 down to 0.4, and the UK 1.2 to 1.1. Again, many different versions of the forecast here. And Brexit, of the election of December, did have a shift, and then it's kind of gone back the other way again there. So quite a lot of areas there which we're seeing some expected slowdown. Conversely, on the emerging markets, 3.9% growth in 2019, rising to 4.6 in 2020, with a bit of a doubling of the Brazil market, which is a good thing to see, as we've seen plenty of capacity pull out of that market there with Avianca Brazil during 2019. On the Russian side, 1.2 to 1.6, again a little bit up on some other forecasts, up to 2.2. India caused a bit of a stir, really, looking at 5.1 to 6.4. Although depending on who you speak to, it can be between 4 and 8, due to a little bit of politicization of some of the economic figures there domestically. So there is a little bit of an upheaval going on there, depending on the quality of the economic data in there. And China only showing a slight drop there from 6.1 to 5.9. I mean, overall, 2019 first worse than expected a year ago, pretty much across all of the regions. And there are many different factors, of course, that will come into that. There's a lot of geopolitical risk, US trade problems as well as some more localized issues too. I mean, generally the slowdown for developed economies was generally predicted, but the result is expected to be even worse still going into 2020. If I look briefly, really looking at, say, some of the aspects in there, so trade tension, tightening of financial conditions, production moderation, debt vulnerability are all areas that we're well aware of, but really 2019 was mired by a lot of international trade disputes, which will really pretty much rang true. Looking specifically at geopolitical risk briefly, if I try to quantify what the US-China trade tension effect was, it was between 0.8 and 1% effect on GDP within that period there. So if it carried on going forward, then that would be what we would see. But we are starting to see moving through phase 1 of a new trade agreement, and we expect to see that sort of gain pace through the first quarter and second quarter, and certainly done and dusted hopefully by the middle of 2020. Brexit no deal uncertainty is still there, and certainly with a very large Conservative majority in the government, we expect that could possibly be a little bit higher on the agenda, and what effect that has is still very unknown. Everywhere in the press at the moment, the US-Iran action continues, and that seems to be going through a period of escalation and de-escalation at the same time. But realistically, when we look at the oil, that really didn't have that much of a change long term, although it is only still obviously in January. Climate change was a big thing, obviously in 2019. It's been obviously there for a long time, but getting a lot more headroom in terms of getting, sort of in the press. Political risk and conflict, of course. Interest rates a year ago, we were expecting 2 rate rises. In the end, we ended up with 3 cuts, which is sort of testament of a sort of a preemptive strike to try and curb any issues going on there. And the UK has been pretty static on that. And we measure the UK one pretty primarily because of the effect with the Brexit. So, realistically looking at it from overall, stable global GDP growth, when you look at it from a point of view of mixtures of advanced as well as emerging markets. So when you're looking at, when we look at, the IATA forecast, there are elements there where we're still seeing quite strong profitability, but it's still coming a lot from a lot of areas which we've already seen quite levels of high productivity. So if we're moving over to the oil on page 2, there's been plenty of spikes caused through 2019, but generally the bandwidth was fairly tight. We saw a lot of Middle Eastern tension, but they quickly retracted as we saw sort of the futures markets on those were looking at fairly bullish still. And although there's been quite a lot of money made in the trading markets of those sort of areas there, the outlook expectations, obviously, if economic slow down, we do expect that the demand for oil will come down. So therefore, we're expecting stocks and supplies to also mirror that too, although it still remains a fairly strong political weapon overall. But generally speaking, the sort of tensions between OPEC and the US and Russia have subsided a little bit from that side. Although if we start to see a little more tension with the Middle East and the US, then we could get that thrown out fairly quickly. Moving over to the foreign exchange, further weakness on the horizon. Now, pretty much most of the currencies I looked at for 2020 were weakening against the dollar. Most of those forecasts were coming from the US, looking at the strength as the trade dispute is over and we start moving towards the end of the year for the election. But when I look at, say, how the performance is for 2019, a little bit better than what it was in 2018. We saw pretty much all currencies fall below the line compared to the dollar, whereas for 2019 we saw actually a few sticking ahead above. So we certainly saw with the Japanese yen and the sterling as well, which were sticking above. But there was continual woes for Argentina and a few other currencies in there that will, when you consider that on an airline perspective, a 10% variance is enough to cause a significant pain for any particular airline, and certainly 2019's variability could have been a lot worse, but still the failures, when we consider the failures, that was a long-term effect that was building up. Looking at the traffic performance on the next slide, and then just looking here, these are just taken from what we've been seeing through IATA and a few others. Certainly load factors have continued to improve, and that's one thing we certainly have seen, but certainly there was a lot fewer newer aircraft delivered than what was expected 1 year ago. Growth for 2019 revised from 5 to 4.3. Certainly growth capacity was only 3.8. Much of the same really is expected for 2020. I mean, it's certainly the revenue expectation is still in the very high 20s, with a large amount of that coming from say the US market, and certainly we'll see that evolve over the year. But 2019 IATA did have quite a big change in terms of that. It was more of a 20% shift in that revenue, but that's something that we'll keep an eye on as we go forward. I mean, generally most of the regions were pretty strong. If I look at particularly, say, October's market, not in this slide, but if we look at, say, what happened in Japan for October, we actually saw quite a strong uptick, say, for the Rugby World Cup. So there are many things that can affect this on a relatively short-term basis. The freight market for 2019 was pretty horrible, but we are starting to see that decline slow down and start to stabilize. So looking at the next one, looking specifically at the yields again continually declining, which is not particularly good news, but something we've got quite used to. But what we saw for 2019 was a large drop for the premium traffic, another 5% drop down there too. And the expectation for 2020 is a further 10% drop across the board for yields, taking those down to the low 60s in that particular sense. I mean, yields essentially do remain too low for sustainable profitability outside of the US market anyway, whilst the US dollar remains so strong. So while 2020 oil forecasts do suggest some stability, we are seeing some slacking down on the currency as well. But really, it does highlight that airlines must remain fairly flexible to manage that capacity. So just to sort of summarize the economic overview, GDP stable when you match everything together, but really, caution is still remaining. Trying to predict that Brexit effect on the European performances and the UK's performance is really very unknown, and I've seen 100 different ways of looking at that, and many of those don't look particularly good. So we expect that to be a relatively painful exercise. On the currency of financing, the low interest rates will certainly spark further interest from even more investors who are looking into potentially, whether it's leasing ABS or even potentially freight conversions, as we'll see that potentially uptick and potentially aircraft come available for conversion, but also the parts market and the MRO market too. Looking at oil, not really expected to do anything in 2020. Very much seems to shake it for a few days. So it's very hard to predict really what we see is going to be the main thing. Of course, if it went one way, if it went very high, then we would expect a whole lot of new orders. If it went the opposite direction, then we would expect to see retirement rates drop, and then we see those older aircraft being used more efficiently. So it's really just management of that. On the demand and capacity side, demand is expected to move in line with GDP, but there is still that significant capacity increase when compare the 2 years, because we're going to start to see at some point a large number of normal maxes that are going to be suddenly entering the system once again that have been already delivered, plus the eventual restart of the line at some point within hopefully within 2020. Yields remaining low, and we'll expect to see more defaults as a result. So moving away from the economic side, looking initially at the failures. I mean, certainly 2019 was a particularly horrible year for failures, not in the number of airlines, but looking specifically at the number of aircraft that were affected, to the point where we're now at the highest point in history, with 27 operators ceasing or suspending operations. So some of these may come back, but not in any sort of significant numbers, with around 430 aircraft affected, which is considerably higher than where we were in the worst part of 2011, which was just around 370. Lease defaults were up significantly, so not just the ones that failed, but also the lease defaults generally, with friendly repossessions were up considerably as well. And where we've traditionally seen lessors that held back from repossession in 2018, they started to take more action in 2019 as soon as issues appeared. I mean, there are some lessors out there who will be the first to march and get aircraft out, and whilst other ones who are less experienced may want to hold back. But we saw a much wider, broader spread of lessors who were jumping in and taking aircraft out, which is a little bit more testament to the fact that they may well be seeing the benefits on the pricing of selling aircraft, although rentals themselves have been depressed. So there are sort of two areas there to really to consider. The worst culprits, Jet Airways, which theoretically haven't still really disappeared as an airline, and there has been some elements out there that there could be some form of resurgence, but that would be a fairly courageous decision for an investor. Avianca Brazil was 59, Thomas Cook 46, Germania 28. So some really big numbers out there. When you look at just the last 20 airlines, was 121 aircraft amongst those smaller fleets there. So the little inset graph on that chart shows you the number of aircraft on average per operator that were part of those failures. We are expected to see some, as I said, some of those restart in 2020. So we might see a couple of those come back. Certainly the things that have been cited as the reason, we're looking at rising costs, down to oil, labour, foreign exchange, trade uncertainty, lack of availability of new technology has been quite a favourite. Weak business models and weather, all cited as possible reasons. Really, stable. I'm looking at the demand side, stable GDP growth, weaker tourism, for some due to foreign exchange, geopolitical risk as well, and flight shaming also adding onto the list for the very first time. So, when we look at, say, what's going to happen for 2020, of course, it's very hard to say, well, which ones are going to fail. Certainly, Hong Kong, South African have been very high on the agenda. Norwegian have been on the agenda for the last 3 years, and I would have said Flybe, but then, of course, last night we had the UK deciding to bail them out. So that's something that looks like it's kind of off the list. But certainly when I look at, say, regions of the world, Southeast Asia still feature quite prominently. And when I look at, say, Argentinian currency and things like that, then clearly I would see problems there. So moving over to the OEMs, which we cover a couple of slides. 2019 clearly was a very challenging ordering year all round. We were expecting lower orders for both OEMs, and we were expecting a slight uptick in terms of cancellations. But of course, what we saw from the MAX grounding was that we got a lot of resurgence of demand for 737-800s and also A320s alike. So we actually saw, in some cases, a little bit of an uptick in terms of demand and rental and price firming as well. But we saw that, generally speaking, up until most of the year, up until September, both OEMs on the growth side were pretty poor, with the last 3-month push there from Airbus, which is something we've become used to seeing, to the point where actually they were higher than where they were last year. So a real solid ground has been made by Airbus to further expand on the A320 family too, with the launch of the XLR, which has kind of countered that A380 fallout. And they've also managed to grow up their A330neo backlog as well. So that's encouraging to see, especially with subdued wide-body demand. Boeing did have a relatively good start of the year. I mean, they did start relatively strongly, comparatively compared to other years. But clearly, the effect of the MAX grounding was catastrophic from their point of view, from their ordering point of view, and everyone else, of course, it was catastrophic from that point of view. But and then they haven't made any further ground on the 777X. In fact, opposite in that fact as well. Thankfully, a good number of 78s were ordered, but it does continue to be a bit of a lackluster period for wide bodies. So when you're looking at, say, the gross versus the net, certainly on the net side, Boeing were considerably underwater from that point of view. Looking over briefly at the regional space, lackluster performance pretty much persists for the RJ market, with a predominant ordering activity coming from the older variants due to scope restrictions. Embraer continues to sell the 175E1 alongside the 195E2, which really closely resembles more of a narrow-body aircraft than a regional. Scope rules sparking the launch of the CRJ, which are basically just old 700s with a first class added into it. And then we've had a relaunch of the Mitsubishi MRJ into the SpaceJet. And quite confusingly, we've got the MRJ 90 now, the M90, and the 76 now, the M100, which has caused a few questions. Service entry for the 100 is now 2023, so it just continues to push further to the right. But as of the middle of this year, then we'll have the CRJ program under their wing too. So not really a lot of great news in that space, and we really don't see much relaxation of the clauses going forward. ATR continues to add to its order book, holding about a backlog of around 230. But it does suffer a little bit in the secondary market, and we've seen a number of the failures that have happened in 2019. The more difficult aircraft to shift have been some of those ATRs. It's been kind of a bookend part of that, where we've seen wide bodies being difficult and some of the very small ones to be quite difficult too. But however, the ATR is one of those aspects where we do see eventual renewed resurgence for the type. Certainly when we consider the global environmental push against commercial aircraft, inherently the ATR and the Dash 8s are inherently more fuel efficient on those shorter sectors. Looking at the overall backlogs, I mean, they're still quite ridiculous in terms of the overall size. We're still looking at 13,000 aircraft to deliver just between Airbus and Boeing. The shape is not really unsurprising as Boeing lose a little bit of ground. Airbus book-to-bill edges close to 1 to 1. And 2019 was the first year in a decade we actually started to see a decrease, where we're starting to see maybe a little bit of air leaked out of the bubble. There is still there's a gap now of around 1,600 orders now existing between the Neo and the Max. Boeing are clearly unable to close that whilst they still await the approvals. There's still around 150 legacy 320 CO, 330 CO NG aircraft delivery, the NGs being the military ones, remaining outside that, because we saw the final NG delivering to KLM back in December. It's quite a little bit unclear still whether all the final COs will be delivered, as some may upgrade and some we don't clearly expect to actually deliver. Mexicana is still down for 4, which is interesting. UTA, which we still had in there until the latest Airbus update, that was removed on Friday. Iran Air have still got a bunch of aircraft on order as well, plus Ural as well, who are taking Neos. And of course, the issues with the Iranians, with the US, we expect that to be something on there that will stay on there for quite some time. And on the 330 side, we've got Hong Kong and Iran as well on their 330 list as well, which we consider that to be a little bit subject to move. While the backlog does remain substantial, discounting measures on individual campaigns will continue to hurt the long-term residuals. So we are very mindful of that, and also not to mention potential undermining of lessor campaigns as well, to place those speculative orders, which we see those falling off a cliff. Overall, we will expect the backlog to decline going forward for 2020. Looking at the Airbus specifically, at the cumulative monthly deliveries, all in green. It was a strong year from that perspective for Airbus. The green diamonds there just show the same period that this time last year. It's not just simply a month, it's a cumulative. And they stayed up based on 2018. So we saw that ramp up of the Neos, and same for both 330 and the 320. The full year average delivery rate for the 320 was about 53.5. Once you take out the first 2 months, a good sustainable 57 was being achieved beyond the normal slower start of that year. In December, Airbus delivered 105 A320 family aircraft, 102 of which were Neos. So really quite, again, another substantial final year push as they push those aircraft out. Certainly in a very strong position to increase production rates towards 63. So they're certainly showing that they can get up there. Wide body deliveries followed a typical pattern throughout 2019 with a slight increase of 2018. So that is pretty much going as you would expect. Looking specific at the A220C series crossover, because we saw that crossover last year. Deliveries increased to 48 from 33 from the previous year. But also looking at, say, the A350 deliveries, they continue to rise, 112 versus 93. And the 330 Neo went from 41 from a pretty much a stand-in start. Looking at the Boeing side, clearly the opposite side of this, looking at how the Max deliveries had that effect. And of course, it's pretty much red from March, totally overshadowed by the grounding. Around 385 aircraft parked with operators around the world, of some of which, of course, a couple of those associated with a failed airline particularly. Approximately another 400 built and parked in the US, waiting for certification before delivering to customers. Production has essentially ceased now, and of course, there's huge reputational damage that must be repaired before Max can really get back on track. And there's been a lot of press coming out in the last couple of weeks, clearly that's very damaging surrounding that too. We saw increased deliveries for the 74, 76, and 787 programs as well, which was good to see. And clearly, obviously they're focused on getting their cash flow up, with a little minor decrease for the triples. We saw a number of 767-300Fs delivered to FedEx, UPS, plus a couple of their 8F, 748Fs, and a bunch of military aircraft too. We saw 78s, 158 from 145, with a good number of dash 10s in there too. We're also seeing as Boeing prepares for the 777X first flight, which is expected early this year. The last few 300 yards are leaving the factory just as the lease end bow wave for initial deliveries starts to arrive. We saw 2,300 yards delivered in 2019 with a 25 freighters, and we'll continue to see the production for a few more years to come for those freighters. We even saw some orders for the 777 remain obviously there, and we've even seen KLM even expand it a little bit, which is always one of those things that the gift that keeps on giving from that side. We do expect further delays, however, for the 777X. Boeing and FAA will remain under scrutiny throughout that process. When we look specifically, and it's one of the only real comments I make specifically about the MAX's return to service, the progress of the MAX program will be dictated by the timing and sequence of the approvals, obviously from the FAA, EASA, CAAC, TCCA, etc. Most aircraft currently sitting with those main four authorities, and with the biggest bulk with the Chinese and then the FAA. Once we see those updates and training is identified and performed, we'll start to see aircraft re-enter service. But we also have to really see both the pilot acceptance, so extra training there, and also, more importantly, we have to also see the consumer want that one back too. So communication from Boeing is going to have to be spot on going forward. So looking at the retirement trends, 2018 pretty much followed on from what we saw. 2019 pretty much followed what we saw in 2018, with very little movement in the overall numbers. Narrow-body retirements remained largely intact, although the unprecedented number of airline failures did cause a little bit of oversupply problem that triggered a couple of early retirements for A319s and some older A320s, and we even saw a couple of 319s retired that were 9.5 years old. When you look at, say, the lease rates for that, we've seen lease rates for those sort of 10-year-old aircraft drop from around sort of high 100s right down to the low 100s for those secondary leases, with a bit of a spread between 100 and 130,000. So it's been effectively really heavily hit, that aircraft. No surprises when you look at, say, the other end of the scale, MD-80s, classics. They still continue to add to large numbers of the retirements. Wide body retirements were interestingly sharply down, which is strange considering the oversupply in the market. 747s, 28 of those, 22 767s, a bunch of 340s, and 14 A330s. And when you really get away from the very old aircraft, we also saw some 777s and the first of the 777 new generation being parted out as well, the 777-200LR, which is the one from Air India and Etihad. And even again, more strange when you consider that Turkmenistan ordered one in 2019 too. Surely there might have been a cheaper option there. Turboprop retirements decreased marginally, whereas regional jets rose quite sharply. So we saw a big drop off in the 50-seater market as well, and some really very young aircraft. There was some young SSJs and E-jets going to retirement as young as 6 years old. That's really quite remarkable when you start to see a few of those ones down that level. But overall, generally, ages have been quite static, so we don't see that big drop off. But then capacity has been very constrained for new aircraft coming in. So moving over to the narrow body lease end forecast, it's quite a complex chart, so just explain it. There's two bars for each year. The left-hand one is the 2020, the previous one of the 2019 is the one to the right. So the one with the little arrows on them are the current forecast. And as expected, we didn't really think that 2019 would ever have actually managed to achieve it. We've been predicting that the aircraft leases would push to the right, and we saw a big shift. We had 742 lease ends, which is up from 577, which is a considerable shape upwards. But that does eerily match, of course, the sales, the failures. So, pretty much static from what we see from one year to the next. We still continue to see new leases, extensions, and building up, and we're seeing that push, and you see the green arrows, and it really does push quite heavily towards 2023, 2024. Now some of these may well have been agreed several years ago, but it was 2019 when the original lease ended and the new extension started. So it may well have been something which is contractual that's been happening, and of course that happens for the next couple of years. There are extensions that are being agreed today that may not kick in for a couple of years, but we don't see that necessarily in the data, only when the contract kicks in. The peaks in 2020 to 22 will push further to the right, whilst the demand capacity remains tight for the COs and 800 aircraft. We are expecting, of course, that big capacity increase, of course, for the MAX over the next couple of years. Will be effectively trying to squeeze another year of delivery at the wrong, at a time. It was already planned to be in there, but of course the timing is everything. So that will cause a bit of a shake-up when we see that capacity come in. And yeah, so if I move over towards the wide-body side, again, complex chart, a little bit flatter this time. The left-hand side looking at 2020, the right-hand side looking at 2019. Despite all the pain felt in the wide-body space, lease ends were considerably slower than scheduled, because there really were a diminished number of 767s, triples and older types that were actually of those events. Only half of the expected 300ER events occurred, as few Emirates, all 8 of the jet aircraft and a Cathay 300ER returned to their lessors. A number of the rest have either been bought by the lessee, there was a number of those, extended or delayed. New leases for 777s tended to go to Russia, Cathay, and a couple going to Thailand as well. 330 expires were very well matched, really not a lot of change there. The ones that were due to come back did come back, or we saw a couple of those where we've seen some failures as well, but they were on relatively short terms. And so we thought it matched the expectation, but not specifically by serial number. So when we look in, say, Singapore handed theirs back, that was expected. Similar to Aeroflot, we did see that, but many others we actually saw having some relatively short-term extensions to that. And then if I move now over to trading activity. So 2020 was strongly down, or 2019 was strongly down the number of trades performed over the previous 2 years. And it was the lowest point in 6 years. I mean, traditionally, the MAA activity down, but we saw a number of plays on equity buyout, certainly with either ACG or Macquarie. And sale leasebacks were down 47% from 2018, which of course is a pretty staggering number. But clearly, of course, when you've got so few Maxes that actually entered the market, that's where we're pretty much pegging that one on there too. JOLCO activity remained pretty strong throughout 2019. Sales with leases down 41% as well, as a combination of poor yields, high pricing, which makes very little sense really. A lot of the quick flip activity after a sale leaseback would also be down because of that, because the sale leasebacks were down too. And also more lessors were looking to the ABS market for disposal. ABSs themselves up 12%, indicating a strong investor appetite for that particular type of product. And that really is, again, considering that there was the highest number of failures within the ABS market too, were in 2019. And when I'm by failures, I mean, not the structure failure, but the airlines within those structures. And then sales off leases down 14% as prices remain relatively firm. Usual suspects on top of the list, A320ceo, 737-800 make up about 25% of the market overall. Regional jet disposal still pretty high. With interest rates remaining so low, we would expect sales activity to be up, but as pricing remains so strong, against the backdrop of terrible lease yields, purchasing activity remains pretty low. So when the MAX does re-enter service, we expect a bit of a tick up on sale leaseback activity, although public sentiment, of course, may ease that. Looking at the leasing activity, new leases were strongly down as sale leaseback activity dropped in the face of a lack of new MAX aircraft. So again, nothing really surprising there. Yields remain very low for most aircraft types as too many lessors try to place new deliveries. Secondary leases squeezed by older variants still desirable, whilst fuel remains in check. Lease terminating events up significantly, although it's still it's still been outpaced by starts, which was boosted by the airline failures. So, I mean, even despite the 330ceo leasing performance being at the lowest it's ever been, the number of new lease starts for the family still show how well the aircraft performers were operators. It's still a liquid moving aircraft, just not necessarily at the rates that people want, or well, the airlines love it, but not so much the lessors. So given where rates are right now, we expect some to take advantage of being able to secure such a capable aircraft for what is a fraction of what it should really lease for. As with sales, the usual suspects still remain on top of the list. 320 COs, 737-800 make up around 25-26% of the market for the combination of starts and terminations. 321 COs, ATRs, 319 COs, and 330 COs still performing in the leasing market, albeit at levels that have to have an impact on pricing. 320 Neo is very close to the top spot now on the leasing activity, whilst the 800 had a bit of a boost for 2019. 737-800 rate performance better than that for the 320 CO, although some good credits will push it down. So moving now on to the ABS briefly. 2019 was a bit of a high point for ABS, was the highest number we've seen, both in terms of number of aircraft and the number of structures, with 17 commercial aircraft structures, so not confusing that with engines or a BizJet one as well. And apart from the usual issuers, some new ABS entrants as well. We are about to launch new portfolios as well. So we saw JP Leases, Airbornes and Stellwagons issuance during 2019. As we've seen already, the highest number of defaults for 2019. We also saw that too within the ABS side. 36 aircraft within structures that have been set up between 2008 and 2019. So quite spread. Although there were a couple of high points with certain structures performing worse. So clearly metal, we had 7 alone from that one portfolio. So we had a concentration risk there with jet specifically, which caused that one. And 2 aircraft have been scrapped from these as well. The 2 Germania A319s were also scrapped, both around 11 years old, and they were part of the Castle Lake one as well. So, but that was part of a 35 aircraft portfolio. So when you're looking at, say, the sort of spread, it could be quite small. And even the situation where we saw there's one A330 remains unplaced, whilst the second one which came out of GCAS's start, that was removed, and along with the 900ER, and the notes were actually paid back in full. So it does show that most of these structures did have some form of management required, and in all those cases management was performed as expected. With when I look at, say, the metal portfolio, a number of those ATRs have now been placed. The A330 is now being placed in other operators, so Ergo are out there placing those aircraft too. And you can see on the left hand side, what it does highlight, of course, is the concentration risk associated with vulnerable lessees. So Jet Airways had contributed 15 aircraft out of their 120, which are part of ABS's. Thomas Cook, 6 out of 34 were ABS. A good number when you look at relatively 5 aircraft out of Germania were in there as well, which is a pretty considerable number, and caused quite a headache for lessors. Looking over to the storage, storage for in-production aircraft at a 5-year high. Of course, clearly that's affected by the Maxes. It is cycling up anyway, of course, as the 320 gets older. It's a much older program. So around 1,200 of those aircraft in total make up that for the storage, with in production wide bodies holding around 400. I always tend to avoid counting all the very old aircraft in there, specifically to try, because that just sort of weights it out a little bit. But clearly, when you look at, say, the upper right chart there, you can see how much that max effect is showing in terms of relative storage numbers. It's pretty considerable. And as we see those aircraft come back into play, then clearly the 320, being its age, will be very high up on that list. 330 CO levels are 50% above where the last 2 years, and we're up around the 150 odd mark now between the 2 models, and lease rates have been all over the place. We've seen them go below the 200 mark for relatively long-term rates with a good credit airline, for a good 8-year lease. Seeing some of those ones drop now below 200, which is pretty staggering for some of those aircraft. So where we've seen new opportunities for the ultra long haul low cost, there resurgence there, but then we've also seen some of the biggest failures come from those business models too. 787 storage levels have always been in the press the last couple of years, obviously with the engine issues. and there's still a number of those that are still out there. Lease ends for, although I would say that Rolls-Royce were adamant that in 2020 we will see the engine issues resolved and get those aircraft back in the air. Lease ends for what I call the 777 next gen, 200LR and the 300ER. We're expecting those to rise pretty significantly over the next couple of years. Already lease rates have been pulling down below 400 as we've seen some of those place. So looking specifically at the lease rates just in the last couple of charts, we're looking here just really at the NG Max CO Neo example, and I've added the Max and the Neo to the left hand chart there, which is looking at the constant age 0. Generally speaking, new aircraft tend to follow interest rates fairly steadily. You see that decent trend in there, and then we've seen a sort of an opposite effect over the last number of years as we've seen the availability and the increase of number of lessors really push pull that number down. So generally speaking, we've seen them shift downwards for new aircraft over the period. So and the Max of course stopped dead around the beginning of 2019, so we don't post any more figures on that. But when I look at, say, some of the performances and campaigns for the Max early 2019, it was they were well and truly into the 200s, which was pulling that number down when you're looking at the low end. But we had seen a couple of aircraft that have been set a little bit higher than that, set when they were negotiated a little bit further time before. When we look at the 10-year-olds, as expected, we saw 737-800 levered off. In some cases we saw an uptick. In very short-term cases we saw a massive uptick in the odd one or two cases, but realistically, generally, the demand for the 800 was pretty strong. And as you can imagine, with things like Jet Airways 800s, we saw very, very quick placements of aircraft. And like for the ABS market, where we saw on average out of the 9 or 10 aircraft that are still yet to be placed, when you look at the rest of the sort of 25 aircraft, it took around 4.5 months to place those aircraft. When we look specifically at, say, the 800s that say people like Castlelake placed with and Carlisle placed with SpiceJet, that was pretty much moving an aircraft one side of the field to the other. So it was pretty much done and dusted very quickly. So we saw some very, very good reactions and quick reactions from getting those aircraft in the air, not necessarily for long terms, but it's really a stopgap from that side. In terms of where would we see the recovery for this, I mean, clearly oil is a factor and the availability of new equipment is going to be a considerable factor, but the number of lessors and OEMs competing against lessors on campaigns is not a recipe for success for the younger aircraft. And with more investors coming into space and lower interest rates, we only see that as downward pressure, whereas some of the older aircraft, if oil prices stay relatively low, reliability stays strong, then we expect that to be a little bit remain firmer. Now, just finally looking at the wide body space, only briefly touching on this. This is looking a little bit at some of the poor performances on orders over the last few years. As oil came down sort of the end of 2014, we pretty much saw apathy just leak straight through into the marketplace, and not really a lot really pushing for new orders. So in terms of where we consider where any sort of resurgence of this market's coming, of course, is going to come from a new product that fits the right sort of slot, or we're going to see oil price rising up and then trigger people to actually go out there and buy these things. Clearly, the 777X has lost a bit more ground, whilst we expect the 330neo 78s and 350s to be building up and picking up the majority of that market. The 777X obviously has a place, but there's still a lot of operators out there who still haven't made a decision yet as to what they're really going to do in this space. Now, clearly, oil has an effect that it's most affected on the wide bodies. Now, looking at the lease rates on the next slide, we'll see here, this is just looking at the A330-300 example. Next week, I'll release the 777 and the A330-200 examples just to give us sort of a comparative on this. Wide body leasing market has been less fluid than narrow bodies. We see fewer lessors involved in this space anyway, so you're chasing a small number of transactions. But as you can see, with the storage level going up, the lease rates have just simply been falling off a cliff, and it's just difficult to try and keep up. Now, we're looking here at new aircraft and 10-year-olds. The real trouble is when you're looking at, say, aircraft that's been on lease for a few years and you're trying to value that aircraft. as well, and what its sort of lease rate into the market. We haven't seen too many 3-year-old aircraft placing in the market. It's all been 12-year-olds and older or new aircraft. So you're making a judgment on that. So this is the concern is whether this leads into write-downs or whether this how we can see this market going forward. So you know, the team are really looking very closely at where the values are shifting for this. But when I look at specifically at the A330, you know, it's had a long history of resurgence and failure at the same time. You know, we saw Skymark causing problems there in 2015. You know, we saw new aircraft come onto the market, TransAsia. Then we've seen WOW, Jet, XL bankruptcies, and then at the moment now we're also seeing Hong Kong and South African being high on the agenda for where those rentals and values could go. But of course, we're also seeing a large number of Singapore aircraft that are coming into the space. I mean, I could talk forever on this particular aircraft, but I won't. And so what I'll do is I will pass over to Mike, who's just going to go through some of this value and lease rate aspects.
Great, thanks very much, Stu, and hello everyone. So yeah, we've obviously touched it, or Stu's touched on a few aircraft types going through the presentation there, but I'm just going to give you a rundown on some of the popular single aisle and twin aisle types, and then we'll have a brief look at the regional market, the regional jets and the turboprops. So just looking at this first slide, you don't really even need to read the numbers. You can just see by the colors that there's quite a division between the performance of the single aisles and the twin aisles. Most of the single aisles have performed well. With looking here at the value changes through 2019. So A319 CEO has seen quite an uptick in terms of values, particularly on early vintage aircraft. We're seeing strong demand for parts. Engine values are strong, so that's supporting the values of the older aircraft, and the youngest aircraft are holding on quite well in terms of their value performance. We are seeing a somewhat wider variance on lease rates, and that's quite dependent on credit. We're seeing strong credit airlines like American still taking these aircraft in, and obviously they're not paying rates anywhere near where the rest of the market are paying as well. So there is some differences to be observed there. A320, similarly, that's the much more larger fleet size. We've seen value increases there on the early aircraft and the mid builds, and the young aircraft are holding on well. Lease rates performing well also. We've generally seen strong demand for the narrow body types in the absence of the MAX as carriers are looking to support their capacity there. Moving on to the largest member of the A320 family, the 321-200, that's performing very well. It's difficult to get hold of a good example of one of those at the moment. There's also the P2F passenger to freighter conversion program starting with those, and we're seeing encouraging lease rates on those aircraft for the early examples that have been converted. But generally, very strong performance in terms of values and lease rates there. As we move on to the Boeing aircraft, the 737-700, the smallest variant, that's had somewhat of an uptick in value, and the 737-800 very strongly performing still, with demand for both of those aircraft types for parts. Engine values, much like the A320, performing very well. The 737-800, we're also seeing a good market developing there for P2F's passenger to freight conversion, and those continue to be performed. A320neo, the newer version, the youngest model for Airbus narrow body in the market. Values are increasing there. Lease rates are firming up, so we're seeing those sort of creeping up into the mid 300,000 ranges. Similarly to the older aircraft, there's quite a range of lease rates that we see depending on the credits. So if you're looking at airlines, weaker credits or shorter lease terms, those lease rates can push further up towards the sort of 400,000 range. We don't have the A321neo on here at the moment, but those aircraft are performing well. We expect to see those lease rates move up towards a sort of 400 plus over the rest of the course of this year. There is a range now of specifications, fits, and equipment that you can have on those aircraft. So you've got the long range LR variant. Obviously the LR will follow in a few years' time, but with various tanks, takeoff weights, engine thrusts, you can get quite a range of values. So when you're pricing up those aircraft, it's important to bear that in mind. The 737 MAX, obviously Stu's mentioned quite a lot about that aircraft. The aircraft obviously still grounded, so our values have been frozen during that period. Just to point out that we had seen lease rates soften before the aircraft was grounded around 10 to 15% in the sort of 270 to 80,000 range. Obviously we're expecting the aircraft to come back into service this year. Exactly when, we're not sure, but we may see some of that soft lease rate performance endure. Moving on to the twin aisles, we won't kick the A330 much more. Stu's already made a few comments and given some of our thoughts and feedback on those aircraft. Mainly it's been the midlife aircraft and older that we've seen. As Stu mentioned, South African has some of those, and there are some younger examples there. So we'll have to see what happens there and what the performance might be if we do see aircraft like that come into the market. Some of the newer aircraft in the wide body space, A350-900, also looking at the 787-9 further down in the chart, but those are probably the best two performers in terms of the wide body values and lease rates. We have on the A350 seen some lower lease rate points, so we're seeing a widening there in terms of the lease rates that we've observed, but we're still seeing some at the higher range as well there, so that's encouraging. A380, not such a positive story. We have decreased our value opinions on those. We've had to change our forecast as well, given that firstly production is ending next year, but also we're seeing a migration away from that from some of the operator base. 777s, the 200ER, our values are already heavily depreciated for those, but we can expect lower lease rates. The 777, as you mentioned some about those aircraft. Values for the younger aircraft have held fairly well, but we have brought some of those values down for the older aircraft. We're seeing lower lease rates than we'd have expected on mid-build, and those continue to soften into sort of mid to low 400,000 range for a secondary lease on somewhere around a 12-year-old aircraft. The 787s, the 9 continues to be the most popular. We've seen value strengthen for the new build and widening of lease rates observed for those, similar to the A350 really what we've seen. But the 8 is starting to show a little bit of a weaker performance depending on the credit. We quickly move on to the regional jets and the turboprop aircraft. The regional jets, some differences we've seen in performance across the Embraer product line. The E175, there's much less availability. Much of the fleet there is residing in the US, and a much lower sort of proportion of leased aircraft there, so less availability. We have seen operators paying premiums if they want those aircraft due to the sort of lower availability. Embraer, the values have really held quite well across vintages. We have seen some flattening of lease rates to the extent that some have dropped in the order of 10-15%, but we're seeing those really in the sort of 120, 130 sort of range. That's 120,000, 130,000 a month sort of range. The 195, the largest model, we're seeing some of those aircraft transition. LOT seems to be taking those aircraft out of carriers like Azul, and you can get a lease premium on some of those aircraft. Their operators are prepared to pay a premium over the 190 there. CRJs, much of the fleet still in the US there. We have seen some values increase on some of the early to mid builds, and the engine values seem to be performing reasonably well for those. And just to wrap up with the turboprops, We have seen some value decrease over 2019, but we've seen a lot of placements, and a lot of that supply is clearing out of the market. So we have a bit more of a positive outlook for 2020 than maybe we did in 2019, and that really goes across the models that we have on the chart there.
Yeah. Okay. Thanks, Mike. Just to clarify on Mike's points on his single aisle narrow body lease rates, and compared to the previous sort of charts we saw on narrow body lease rates, the stuff I'm looking at, specifically looking at where we're seeing some of the trends, Mike is looking at more specific examples. I may be looking at some of those more extreme. So I value that point in terms of that there could be some slight confusion in the messaging there. But generally speaking, we're seeing that there is some potential firming up there. We have seen firming up of the older aircraft with the capacity issues in there. But clearly, we have seen a decline over the last year for narrow body lease rates in that sense. What we're seeing now is Mike's looking at, say, where the firming up is going forward from some of those. So just to finish up on the last slide, I'm just going to cover a couple of points interesting with time. I mean, really, when I look at some of the takeaway points for 2020, failure has been clearly one, looking at the credit side of things. We're expecting clearly lower level than 2019. That would have been quite hard to have that even further, because we are also seeing a reducing capacity on the leisure markets, which is also highlighting that other sides get a boost too. So where one airline fails, another one gets a resurgence, providing that there's still enough demand out there. So it's certainly not run to the hills time. It's certainly a situation where we see some the balance in the market can be shifted, and of course, looking at, say, the interest rates down, we still expect, and also the performance of the ABS in terms of how the managers have dealt with it. ABS market still expecting to be pretty strong, but I think more due diligence is required in terms of looking at some of those credits. I've already mentioned about the lease rates. I mean, generally the lease rates across the board are generally down, as what we've seen from a counter review a few years ago, but we do see that they've bottomed out from that point of view. But on the wide body side, we will expect to see a little bit of price correction for some of those aircraft. As I mentioned, the impact will lead into values eventually.
Okay, yeah. Great. Okay, well, thank you, Mike, and thank you to Stu. Hopefully you found that really useful session. We've got a few questions that have come through. While the guys just pull them up, if I could just bring to your attention that the data used in today's session is from IBA IQ, our online data intelligence platform. If you're not familiar with our system, we have various modules, fleet, values, trends, and engines. We are offering free trials, so if you would like a look around and like to register for a trial, you can do that through our website, iba.aero, or when we send the slides out to you tomorrow, you can actually link through the slides as well to the website to do that. Okay, Mike, I believe you've got a few questions that you're going to address.
Yes, we've got a few here. So the first one was ABS. Could we please define
asset-backed securities? As a structure for financing aircraft.
Okay, I think that came before the slide, so you may have answered that during the slide, but thought we'd answer that one. Here's a question: what happens to single aisle value and lease rates when MAX come back? Should we all be worried? Very good question.
It's all down to timing. Yes, I mean, we were always expecting the MAX. If we imagined 2019 didn't happen, or the event of 2019 didn't happen, we'd have expected a large number of MAXes to be in the marketplace, and given the fact that we saw traffic dropping, we would have seen that that effect happen much sooner. We would have seen the 800s really giving a kicking in from, not to want a bit of a word on it, on the lease rates and values for that. So the inevitability is there. Of course, aircraft are depreciating anyway, so we expect they are performing on the pricing side much better than where they should be. And when I look at, say, some of the purchase prices of 737-800s for freight conversion, we're seeing those up at the mid-teens when really they should be down at the low teens to make it more viable. And it needs to come down. It will need to come down. But realistically, once you've got to get the aircraft in the air and get through certification, then get them in the air and get confidence, and the airlines have to be happy with the reliability, etc., etc. You're talking a 2-year process. that it's going to gradually, eke in. But yeah,
so not something immediate.
It's not something which is going to happen and off a cliff. It's going to take some time.
So there was a question around, you're mentioning yields dropping, passenger yields, you expected those to drop further down into the 60s. What's likely to be the effect of that on the airlines? And do you expect to see more failures in 2020 as a result, or will it be even to the previous year or fewer?
I don't think it's going to be quite as many failures as last year. I do think, though, that airlines are becoming more savvy in terms of their business models. The weaker business models are the ones that are failing. And while demand still stays there, then we still expect there to be a viable model. So it's the consumer that's really getting the benefit out of it. And we are seeing better ways of extracting ancillary revenue and various other different things like that. And there are many different types of models that large carriers or older carriers or new startups can take advantage of that they've seen work prior to that. And it's just a simple part and parcel of the aviation cycle, which we've seen many times before, albeit slightly different timing. So I do expect there to be failures based on that. So we're really looking at bad business models, but also airlines that have very high concentration of leases compared to owned as well. They don't have a lot of leeway if something goes against them.
Okay, so those are the ones to look out for this year.
Yeah.
Here's another question. Will the industry be under more pressure from the environmental lobby? We've seen the so-called flight shamers or the flug scammers in Sweden. KLM telling people to take the train, airlines saying the carbon footprint is better than others. Ultimately, will this impact the OEM's long-term outlooks?
When we see real impact, then yeah. The not to be cynical about it, but obviously economics and environmental are two sides of the coin, that if we start to see economics really heavily slip, then we will see a resurgence going back the other direction. Although it's so very, it is a subject that's firmly here to stay, and there's more onus on the OEMs to design aircraft and to address that, but also things like ATC issues, and try and get more efficiency out of the aircraft, get them on the ground quicker. And soon, and it's going to be an area that we're doing a great deal of stuff over the next, the next year will be very prominent. I mean, even I think Phil's on a panel next Thursday, AFJ, and also we have I think we have also a breakfast seminar, I believe, in ISTAT as well, in March. So it is something that is something we're working very strongly on, and you'll see more stuff in this space.
Okay, all right, guys, I'm sorry to interrupt you, but we have actually run out of time. We've overrun a little bit, so my apologies for that. But so that just leaves me to do some thanks. So thank you to Stu and Mike, and thank you everyone for attending today's session. Hopefully that you have found that very useful. Please drop us a line. Our email details are on the slide if you do have any more questions. And if we haven't answered your questions today, we will follow that up and we'll contact you directly. As I mentioned earlier, a copy of the slides and the recording will be sent out to you tomorrow. So on behalf of Stu, Mike and myself, thank you for joining us today, and goodbye.